Unfortunately, brother, your credit is 347.
Wait. You said 3?
Yeah, 347. That's what the credit is.
It goes that low?
All right, we've got bad credit, bad loans, bad information, and a really bad financial situation. This is what happens when short-term choices get financed for years.
Hello?
Yep, Joseph. I'm looking at your application here. Tell me a little bit about yourself, brother. Are you working at the moment?
Right now, doing the self-employed thing. You know how it goes, man.
Nah, I don't know how it goes. You are about to tell me. Okay.
Trying to get to the bag. You know how it is in New York thing, man.
That's what's up. Well, listen, I don't blame you. So if you're self-employed, does that mean you pretty much, well, I'm assuming, you got some bank statements to show some income or deposits coming in?
Charles, man, I'm gonna keep it a buck, man. I got bank accounts, bank statements, but you know how it is, man. We hold a lot of money cash, man. It's more cash than anything.
So how much will you be putting down in this vehicle?
Man, bro, I'm really trying to, leverage my credit, dog. I mean, can we do like 2 bands?
When someone says they want to leverage their credit to buy a car, what they really mean is they're using debt to buy something they can't afford. There is nothing being leveraged here, except his future income.
2 bands. All right, let's see. 2 bands down on the M4. By any chance, Joseph, do you know anything about your credit, bro?
Bro, this last spot I was at, man. I mean, we checked Credit Karma and all that, bro. Credit Karma told me like 580, 600, man.
Unfortunately, brother, your credit is 347.
Wait. You said 3?
Yeah, 347. That's what the credit is.
It goes that low?
Do you have any cosigner? Anybody? Well, you said you don't have any cosigner. Listen, brother, I would definitely suggest you to, if I were you, I would probably carry or like trying to get a cash car or something, for like maybe $2,000, $3,000, $4,000, $5,000, something that can help you for now.
One of the lowest scores we've seen on the channel, and of course he's looking to buy a BMW. When your credit score is low, the problem isn't the car you want. It's the cost of borrowing to get it. A low credit score doesn't always stop you from financing a car, but it does make it the most expensive way to get one. Like the salesman said, and for the majority of people, the best option will always be a cash car.
But for M4 with 347 credit score and 2 bids down and self-employed on top of it, unfortunately, brother, there's absolutely nothing we could do about it. Yes, we do work with bad credit, but you're gonna need like heavy cash down. And even if you have heavy cash down, I don't think I would recommend you to go to this route. I don't think so. I would still recommend you to get a cash car. It might not be what you want, don't get me wrong, but that's what I would do. And trying to repair the credit, remove the collections, the charge off, pay some of those debt, and eventually, reestablish the credit. And if you could even get a qualified cosigner, that could help you to do better. All right, Joseph?
Damn, all right, Charles.
Even with a score this low, he can fix it over time. It's going to take a lot of work and a lot of time, but it can be done. Fixing your credit isn't about getting approved. It's about lowering the cost of every dollar you borrow. Debt isn't good, but for most people, whether they like it or not, the key is whether that debt actually helps you build something, or just costs you money. A great example of that would be a home.
I have no idea how some people are surviving in this economy. Yesterday, I had a lady come in who was looking to trade out of her cash car and into a Hyundai Tucson. She told me that she needed every single option in the car, so that means she has to be in a Tucson Limited. I pull up a Tucson Limited, she takes it for a test drive, she absolutely loves it. Next step from here is just an information application so I can get her approved. She goes on to tell me that her total monthly income is $1,700. And yes, I did not stutter, $1,700. Keep in mind, she came into the dealership with 2 kids. She might have more kids than that. Now, I will never knock somebody based off of their income because it's none of my business whatsoever, but all I could do is salute her.
A low income doesn't automatically put you in a bad spot. What matters is how you manage it. When I had debt, there were a few people I knew that made far less than me, but they were living much better. They budgeted, I didn't.
I have no idea how she's able to survive off of $1,700 a month with 2 kids and all the other bills that she has to handle. Nevertheless, I got her approved. Her payment came out to $508 on the car that she wanted, but I told her there was other cheaper options that were less loaded that would save her money monthly. She said she didn't want those. Now, given that she had her cash car for 10 years, she forgot that she needed full coverage on the new car. She ended up just using the quote finder in my bio. She secured insurance for like $200 a month. So $200 a month for car insurance plus $508 for the actual car note. We're at $708 a month. That's a little bit less than half of her total monthly income. God bless her.
The car payment alone is over 40% of her monthly income, before rent, food, or anything else. And we don't know her living situation, but we do know it's going to be almost impossible for her to change it for the better with those numbers. She's leaving herself with next to no room for when life throws something at you. And it will. It always does.
A lot of y'all got the car game f***ed up. Car salesmen, anyone that works in finance when it comes to car loans, they're going to drag me saying I don't know what I'm talking about. 99% of you are going to listen to them and think that I'm crazy, when literally someone just told me at the dealership that I should never pay a down payment on my car because they pocket the money as commission. Yes, that's right. Today's interest rates for a car loan is 6.99%. For a car that's $30,000, not even, with a 700 score, will still run you about $6,100 in interest. Of course, the car salesman is going to tell you to put down a down payment because it makes them more money.
Your down payment doesn't go into the salesman's pocket. It goes towards the car and lowers the loan. Dealerships actually make most of their money on the financing and add-ons, not the car itself. That's why they push loans, warranties, and extras. That's where the real commission is.
That's why you have to fix your credit, so people like these people won't brainwash you into thinking that paying a car down payment is lowering your principal. Interest paid is $6,000. For my car note to be $398. Good credit can have you at paying zero down payment for the same car with an interest rate that can save you $5,000. And let's not forget, the zero down payment that I paid only had my car note go up $50. And I don't give a fuck about your 0% interest rate, because honestly, 99% of y'all would never even get a car loan interest rate with zero APR if your credit score is not at least above a 775.
They do not brainwash you. A down payment goes directly towards reducing the total purchase price of the car. That means it lowers the principal loan amount you need to borrow. That saves you money on interest and lowers your monthly payments. The principal is the actual amount borrowed. Paying cash up front reduces that core debt immediately.
Make another micropayment with me. By the way, I did reach out to my payday loan lender this morning to figure out what these mystery charges are that keep showing up on my account. And they just read me from their script. They couldn't give me an answer except to say that it was fees that I'm supposed to be getting. I called it a scam. And I told the guy on the phone that it was a scam and I couldn't wait to hurry up and pay their loan off so that I could be done with them. Now, let's get right into yesterday's video engagement.
It's another clip of the TikTok method of paying down your debt. Who came up with it? Why would anyone do it? Nobody knows. But people are willing to try anything to get out of debt, even if it makes absolutely no sense at all. And really, that's probably one of the reasons they are in debt. Little to no thought put into what they are doing.
So we had a whopping 611 views, 81 likes, 23 comments, 11 reposts, 18 saves, and 8 new followers. Welcome. I am so happy you are on this bumpy ride of a journey with me. Total engagement 752 plus the $5 that I am chipping in every single day in the month of December brings my payment down to $12.52. Now, my new balance on my payday loan, $858.97. We're going to ask the engagement question because I am running late picking my kid up.
There is a much easier way. Set a budget. Whatever is left over, put it towards your debt. You can use the debt snowball method. There's also the debt avalanche method. It's as simple as that. There's no need to complicate things with views and engagement. This is reinventing the wheel.
Tell me how to get myself out of this giant hole that I've dug.
Describe the hole.
Well, I've been looking over the numbers, and I'm showing I'm right at $37,500 in credit card debt. If I add credit cards, my car, and then if I add student loans, that adds about $45,000 to it.
It adds 45. So what's the total amount of debt?
Yes, student loans and credit cards right under 80,000, like 77,000.
Okay, what's your income?
Right now, it's about 45,000, 40 to 45,000 a year.
When debt approaches or exceeds your annual income, it's become a major problem. The payments don't just reduce your cash flow, they limit your growth. For someone earning $45,000 a year, $77,000 of debt means most financial progress is spent managing the past instead of building the future.
Okay, what's the car worth?
I just got the car a couple months ago. So honestly, I could probably sell it for maybe $3,000 less than I paid for it.
How much would that be?
I show right at $30,000.
Sell it today.
Immediately.
It's my source of income, though.
Your car is your source of income.
Yes.
Describe that.
So I was working DoorDash full time, making about $1,500 a week.
Okay.
And then the car that I had, which was paid off in my name, I blew a hole in the block. And I went a month without being able to get work or do anything because I lived in the 20 miles from town. So I went out and got this car because it's easier to walk into a dealership and get a car with no money than it is to walk into, a shop and get your car fixed with no money.
When people don't have money, financing feels like a shortcut. The problem is that shortcuts in personal finance usually come with interest attached. You get that thing today, but you agree to pay more for it over time, sometimes a lot more. What looks like an easy solution in the moment usually turns into long-term costs.
And my plan was to get rid of, after I get my debt squared away, fix my old car and then get rid of this car.
Terry, here's the deal, man.
I have a car to make the money.
There's no reason you had to go out and get a $30,000 car making $40,000, all in the name of I do DoorDash.
What are you doing, brother?
So we can help you get out of debt all day, but we got to get to the root. So, Terry, what was the credit card debt in? You had $37,000. What were the purchases?
It's just usually paying bills and stuff to get by. Like I said, $30,000 of that is the car. If I exclude the car, it's closer to $5,000.
Okay.
Living within your means lets you fix mistakes with cash. Living beyond your means forces you to fix them with debt. And debt doesn't go away easily. It ties up future income, limits your options, and makes every setback harder to recover from. Live below your income. If you want to see more, you know what to do. I'll see you in the next one.